Following its recent 52-week low, the once high-flying Tesla stock has continued to plummet. After a challenging few weeks, the stock price is progressively rising again, but it's still uncertain what the future holds for Tesla stock. Hi everyone, and happy return to all of it. Tesla shares, since its shares dropped from 389.61 cents a share on September 18, 2017. Tesla has shared more than $20 billion in market capitalization. As investors continue to pull their money out of the market, the carmaker's shares are currently cheap and may experience a cash flow problem. However, proponents of Tesla, like Morgan Stanley's Adam Jonas, see the company's decline as a great time for Tesla investors to buy. Others, such as Dan Ives, think that Elon Musk's recent selling of Tesla stock could be a contributing factor to the stock's poor performance and the source of future valuation problems for the automaker. Why has Dan Ives made this statement, and will Tesla be experiencing worse instances in the future? We have more in this video, but before we dive in, please remember to like, subscribe, and turn on notifications if you enjoy this kind of content so you can stay updated on all things Tesla. Following Elon Musk's revelation of yet another stock sale, the price of Tesla's shares just fell, bringing the company's share price down by almost 49% year-to-date. Only a few days have passed since Musk finalized his agreement to purchase Twitter for an estimated $44 billion. According to a recent report made to the Securities and Exchange Commission, Musk sold over 19,500,000 shares of Tesla over the course of 3 days in November, for a total estimated value of $3.95 billion. Following this, Tesla's stock fell by about 7% to close at $177.59, the lowest level in roughly 2 years. The share price of the corporation, which was already at an all-time low, fell even more as a result. In the wake of this announcement, a number of analyses, including wet brush analysis, Dan Ives has expressed his displeasure with Elon Musk's behavior, claiming that it has fundamentally damaged Tesla's stock story and could have an effect on the company's brand given its current Twitter deal. In light of this, Webbush's list of best ideas recently excluded Tesla shares. Ives attributed this to Musk's involvement with Twitter, which he called a dark comedy show. According to Dan Ives, Musk is now more focused on Twitter than on Tesla, which has led to worries that the Twitter debate may have a detrimental effect on Tesla's reputation worldwide. Based on the stock research, Musk is progressively moving Tesla away from its enormous position of strength and has accomplished what the bears have been trying for years without success. He is smashing Tesla stock on his own. Ives spoke further about the matter and decreased his price objective from $300 to $250 to reflect the overhang, even if he is keeping with his outperforming rating on Tesla shares. Dan Ives underlined how significantly Musk's actions had affected Tesla. Being the CEO of Tesla has made Elon Musk the richest person in the world. Ives went on to refer to Tesla as the golden child of Musk's empire and stated that the carmaker has revolutionized the vehicle sector in the same manner that the iPhone has revolutionized the phone industry. Not only is Tesla a top automaker in the UV market, but it leads the automotive sector overall. By 2021, Tesla's market value had topped $1 trillion, surpassing the aggregate value of its 5 largest competitors: Toyota, Audi, Mercedes, General Motors, and Ford Motor. Additionally, in addition to producing EVs, Tesla also produces solar panels, batteries, and residential power storage, all of which have raised the company's valuation. Although Musk hinted at plans to scale Tesla to the maximum while previewing the release of Tesla's Master Plan Part 3, the automaker is performing extraordinarily well, even in most compliance for Tesla to do better in many areas. Musk claims that the primary focus of Tesla will be scaling to extreme I's, an action that is necessary to take humanity away from fossil fuels and towards artificial intelligence. Musk has great expectations for Tesla, but many Tesla investors are unclear about what's next due to his recent Twitter venture and, more importantly, his decision to sell over $4 billion worth of Tesla shares into his company. Even Musk's reputation, one of the vehicle company's main backers, is in jeopardy. Ives has criticized the Twitter purchase, calling it one of the most inflated in the history of the tech industry. As a result, many investors are extremely dubious about Elon Musk's decision to spend so much for the platform. His assertion that Tesla shareholders were carrying a never-ending noose around their collective necks due to the Twitter deal was reinforced by the confirmation of his worries that Musk was not yet finished selling off stock. He claimed that since Musk acquired the company, The Twitter circus has been a complete disaster from every aspect. When will it finish? Although Musk has stated multiple times in the past that he was finished selling Tesla shares, this did not work out. Elon Musk also revealed his grand vision at Tesla's Q3 earnings this year, which call for the company to launch with a valuation greater than that of both Apple and Saudi Aramco put together. As a result, a number of investors purchased Tesla shares. In addition to Musk's ongoing sales of Tesla stock, the CEO of Tesla also pledged a substantial stock repurchase for the following year. Ives also brought up a number of other things that have transpired since Musk took over the social media platform, including Twitter's PR problems and the termination of roughly 50 employees. While he concentrates on Tesla and SpaceX, Ives, who called Twitter a money pit, said that the best course of action for Musk at this time would be to have someone with experience in social media focus on the site by developing a plan to monetize it and retain advertising. Other studies expressed their disapproval of Musk's previous actions while serving as managing partner at the Future Fund. In response to download suite of Musk's investment, Gary Black said he had been warning about Musk's takeover of Twitter for the previous 6 months. He continued by saying that Musk's skill set is still inappropriate for Twitter because the social media network deals more with growing ads than with engineering or production problems. In closing, he tweeted that Musk should designate an advertising man to oversee the site. Twitter will be a money pit for the next year, according to Loop Fund managing partner Gene Munster. However, prominent YouTuber and Tesla investor Dave Lee has a different take, saying that Elon Musk's skill set is ideal for repairing Twitter. While Lee is fairly optimistic about Musk's work with Twitter, he noted that the project will require more time and energy than Musk initially anticipated, along with the fallout from controversial decisions along the way. Morgan Stanley's Adam Jones stated that he believes the falling stock price is one of the buying opportunities that many investors have been waiting for. Tesla and Twitter are two different platforms, and although they may now have the same owner, they both work on completely different Apple and revenue models. This is what Musk said. Dan Alex has faith in Tesla because the automaker has consistently generated strong revenue figures. I've said that, despite his longer-term belief in Tesla's electric vehicle thesis, the company's roughly $25 sell-off since the Twitter transaction has put enormous pressure on the stocks and created an excruciating cycle for investors to traverse. Ives cautioned, however, that Musk should not take investors' faith lightly or carelessly waste it on Twitter. According to him, Musk needs to take a hard look at himself and stop his never-ending Twitter overhang on the Tesla tail. It's time for this Twitter lunacy to stop. I've talked about my thoughts on Twitter's overhang and what Musk should do to lessen its effects on Tesla. It's time to return our attention to Tesla in what should be a profitable quarter and build momentum towards 2 million units by 2023. The biggest obstacle for 2023 is still optimistic. At that point, Tesla's eyes remained optimistic, and he claims that this opinion has not changed. Tesla Ball appears to be primarily worried about the potential damage to Tesla's brand should appropriate action not be done. But what do you think? Do you believe that Musk erred in selling more Tesla stock to Twitter? Please share your thoughts with us below, and don't forget to rate Tesla. To find out more about Tesla's recent activities, click the next video that appears on your screen.